Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news. Good news on the economic front has been viewed as bad for investors. First in the US, the widely watched ISM Services PMI rose to record a healthy expansion and by more than expected. New orders and employment both improved in a clear sign the giant American economy doesn't seem to be heading for a slowdown yet. This data confirms the strong non-farm payrolls report too. And supporting the optimistic view, American factory orders rose in October and by more than expected and rose at a faster pace than they did in September. It was their biggest rise in 4 months and they're up more than 11% from year-ago levels, so more than inflation is at play here. These improvements are confusing equity and bond. After last week's Powell guidance, markets had expected data to support the Fed's idea that the expansion pressures were waning and the central bank could ease back on their rate hikes. But this latest data is very expansionary and keeps the pressure on. In Canada, they did expect a bounce back in housing consents issued in October, but it didn't arrive. The fall off was less than for September, but it was still a fall away. In China, more big Tier 1 cities are easing pandemic restrictions. There's clearly a revised approach to pandemic control underway there, and it comes as case numbers rise sharply. China faces only bad options, having missed some good options by dismissing Western vaccines. And those bad options are playing out in their economy. Their services sector recorded a terrible November PMI, much worse than the official view, and car dealers report that their inventory levels are sharply higher. And Japan, however, is in a much better state, even if their minor service sector expansion disappeared in November. And India is in an even better state still, with their services sector expanding at about the same pace as the US. In the EU, however, retail sales were slightly weaker than expected in October, their lowest in 10 months and dipping more than expected. Recession worries there are rising, and this data isn't helping. The US Treasury 10-year yield starts today at 3.59% and up 10 basis points from this time yesterday. And the price of gold will open today at $1,772 an ounce and down $25. And oil prices start today down $1 from this time yesterday, just on $79 a barrel in the US, while the international Brent price is just over $84.50 a barrel. And the Kiwi dollar will open today at 63.1 US cents and down a full 1 cent from this time yesterday. Against the Australian dollar, we're a half a cent softer at 93.9 Australian cents. Against the euro, we're at 60.1 euro cents and down more than 3/4 cent. That all means our trade-weighted index starts today at 71.6 and back to where it was in the middle of last week. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.